What's going on, guys? I found this image on Wall Street Bets. Look, I'm not against Cathie Wood, nor am I her biggest fan. I just want to shed some light on her performance and give you an objective view of what can happen the next few months with ARK Invest and growth stocks in general. I mean, we've been getting beat up by growth stocks. I even have a bruised lip from these growth stocks pulling back so much. However, I've got a plan for you guys today. On this chart, you see the black line. That's ARK Invest performance, and the blue line is the NASDAQ 100 back during the dot-com bubble where all tech stocks exploded. There is a scary correlation, and based on this image as well as the positions that I have on Net, Snow, and Rivian, I want to discuss where we could be headed next and positions I would open to hedge your portfolio. I'm going to show you some small account option strategies that require very little capital to make a lot of money off of this trend. If you appreciate me showing you my positions and receipts in each video, drop a like on the video. It will also make you stupid rich. It really helps out the channel. Now, with that being said, let's jump right into it. Based on the chart, there's about 30% more ARK Innovation Fund could fall. Cathie Wood made a lot of money in 2021, especially the first half. She was early on Tesla and has a huge following. Sometimes I think Cathie Wood is better than Warren Buffett. But then, as an investor of 9 years with a finance degree and experience on Wall Street, I think that Cathie Wood took excessive risk in highly valued companies and happened to have a big payoff in a very good year. As soon as the momentum cooled off, now her fund has lost more money than even the most hyped YouTubers pushing trash stocks. Well, almost. So honestly, it's still not clear to me if Cathie Wood is an investing genius or a marketing genius. What is your guys' thoughts there? Let me know in the comments. I mean, really, think about it. Year to date, ARK-K is down 11% compared to the S&P 500's 2.5%, while my portfolio is only down 1%. So I'm not immune to market falls, but currently beating both Cathie and the market in the option community. I mean, look, on a 1-year basis, Cathie is down 37%. While some say ARK-K is becoming cheap, I'd be cautious dumping a lot of money with the recent shaky market. In fact, if not for Tesla, it seems that many stocks Cathie picks just go down. To make matters worse, an analyst pointed out there's a spike in insider sales and the lack of buying interest. The analyst mentioned the median ARK-K holding has lost 55% since its 52-week high. What's going on with ARK is a chicken and egg phenomenon. Is ARK up because Cathie Wood is so smart, or was it up because so many new investors in 2021 followed Cathie Wood on every trade that she made? Either way, it's hard to say for sure ARK Invest is a bubble since it has had a tremendous pullback. But at the same time, many companies that ARK holds are still unprofitable tech stocks. So let me show you a few stocks that I believe are still overvalued and how I plan to make money off of them using small account option strategies. As you guys can see here, I'm using this software to look at what Cathie is doing so I can make money by betting against her and making smart plays based on Cathie Wood's activity. I'm using Lucid Tracking, which I'll drop a link for you guys below. Essentially, there is a fund called SARK, which is short ARK Invest. However, the problem is that shorting ARK means that you're also shorting Tesla, which happens to be Cathie's biggest portfolio position. Instead, I'm looking to run a couple of strategies I'll walk you through on Cathie's other positions using call credit spreads, because that way I can actually bet against some of her plays that I see that she's even losing interest in, while avoiding shorting Tesla because I don't think that really makes sense. All right, so taking a look here, I really like this summary because it basically says top bought, top sold, upcoming earnings, latest ads, all this good stuff. But what I'm specifically looking at is top sold, and I see right here that Cathie has sold Coinbase. So taking a look at the holdings, you can see here there's a lot of red. In fact, the red outweighs the green. So you can see January 12th, January 11th, her shares held in ARK-K and in ARK-W are being trimmed. She's starting to trim this position. And actually, what I really like about this software is if I go to charts, you can actually see right here that the aggregate is starting to dip. So she was increasing. Now it's starting to dip. I'm not sure if she's going to completely dump this position or not, but this to me is a good sign that selling call credit spreads can make some money. So I want to jump over into Robinhood because we've taken a look at some of Cathie Wood's behavior. Now I'm actually going to take a look at Coin right here. I currently have an Iron Condor position, which is also a good position because Coinbase has a lot of implied volatility. That's something really important that I look for. I'm currently up $163, and I just opened this position this week. All right, so I'm actually gonna go back to Lucid. I like the technical feature that it has as well. And taking a look at Coin, I'm pretty bearish on this stock because the MACD doesn't really look good. The RSI is continuing to fall. Usually when the RSI gets really low, I am a buyer of a stock, but for Coinbase, I believe that we can still have some more selling pressure, especially if Cathie Wood herself is selling. Not to mention, this stock really has a high valuation. The market cap is sitting at 48 billion, and it is very highly dependent on Bitcoin and the crypto market. The crypto market has been really hot for a long time. However, it's really difficult to predict what's going to happen next. So going back to Robinhood, I'm going to show you the trade that I'm thinking about making on Coinbase. Now, I've made this trade a few times already. Each time has been very successful. So what you want to do if you're going to sell a call credit spread, first of all, you're selling two different call options. Second of all, a credit means that we're going to be collecting income right here. So this expiration date is today, so obviously that doesn't make any sense. I found that weekly or monthly options are the best. I'm going to go for a monthly option right now. All right, so I can go for an at the money option, right? I have so many students in the private community asking me, which strike do I pick? That's a constant process of me teaching them how to pick better strikes. But look, you don't want to sell an at the money strike right now, the 225, because you're going to have too much risk. You need Coinbase not to rise at all. Now, I'm not a genie. I can't predict the future. I don't believe anyone really can. So I don't want to go for the 225 because that's just too close. It gives me no margin of safety. So what I'm going to do is I'm going to scroll up and I'm going to aim for a chance of profit of around 86%. What I'm doing is I'm looking for a delta that's going to be about 0.15. This is about a 0.2 delta. So that tells me it's still a bit expensive. Therefore, I'm going to check the 280. The 280 is a 0.16 delta. Now that's nice. The sweet spot that I found is between about 12 to 18 delta, somewhere in that range of 14 delta. I'm very comfortable with. 16 delta also works. Now my favorite delta for selling put options, which by the way is also a really good strategy. I'm going to link that in the description. But my favorite delta for selling put options is right around 30 delta, maybe 25 to 30 delta. So selling a put credit spread actually comes in at about half a delta. So if I'm looking at 30 delta, then 15 delta is awesome for a call credit spread as well as a put credit spread. Both of the selling strategies in terms of spreads, I like to look for about a 15 delta. So this 16 delta right here is awesome. The implied volatility is 66%. That's also great. So I'm going to sell the 280 right now, and I'm going to go ahead and buy the 285. Now this is a small account trade. This does not take very much capital. In fact, if you check it out, I'm only putting up about $452 worth of capital and collecting $48. So the return here is going to be a 10% return. And given my prior experience, I've been doing this for about 9 years. I have about a 95% success rate. So here you're collecting about 10%. But if you lose on this trade just one time, you will have a big loss. However, if you're consistently collecting 95% of the time, $48, that means that 9.5 times $48 is going to give you about $456 worth of profit. And then if 5% of the time you end up losing $450, you lose about $22. So this strategy right here actually has over $400 worth of expected value. Again, I will have a big loss here and there, but if you manage your risk properly, then this trade right here is still about an 8% return, even when factoring in for about a 2% loss per month on average. So you can make 10% and lose 2% if you're 95% successful, which I have been. And the way I've been doing that is by combining my spread strategies with good technical analysis and obviously just doing extra research. So Lucid is something that I started using this year. I'm going to continue using it because it's going to give me so many more ideas. If I go back here into the main dashboard, I'm also going to be looking at running a couple different strategies like Roku, Zoom. These are big tech stocks that I believe are overvalued. So even though Cathie Wood is buying here, that's actually still really interesting to me because I still want to go against Cathie Wood on some of her big positions because I believe that they're overvalued. Now, taking a look at the Zoom chart, this is currently a number 4 position for Cathie Wood, and she continues to increase her position. This purple line right here is the aggregate of all of her different portfolios. So ARKW and RK are the 2 portfolios that currently hold Zoom, and she continues to add here. However, if you look at the price of Zoom, it continues to fall. So let's go back into Robinhood, and I did forget to execute this trade. So I'm going to click continue. I'm going to open up one of these contracts right here. I'm going to go put 0.5. So this is actually going to give me above a 10% return. All right, so I just placed this trade. I'm estimating $50 for $500 worth of collateral. I'm not getting filled. So this is a really good learning lesson for you guys. If you're not getting filled on a call credit spread or any credit spread, then you have to be a little less aggressive with the amount of money that you're asking for. So rather than going for $50, I'm going to go for $45. And there you go, go, guys. I just got filled for $45. Now, taking a look at Zoom right here, this stock is just completely selling off. Again, this is a Cathie Wood play. This is a number 4 position, and she's down 41% in the past 3 months. I mean, that's ridiculous. If anyone was just following Cathie Wood, not doing their own research, they definitely got burned on a few of her plays. I mean, a majority of her plays seem to not be working out, which again is the reason why I think call credit spreads on these highly valued stocks is going to be a good bet, especially going out 1, 2, or 3 months out into the future, because over the next quarter, I think we're going to be very shaky. So I'd be looking into hedging your portfolio, and selling call credit spreads is actually a hedge in your portfolio. So let's do the same thing that we just did. I'm basically going to scroll up and I'm going to look for a delta that's around 0.15. That's a 0.26. So we know right there that's going to be a little bit too aggressive. And in theory, Zoom could pop in the short term. So if it pops, that would hurt your 180. Right here, looking at the 190, this is much better. And looking at the premium right here, the premium is pretty good. I mean, $228, and the premium above is $177. So doing the math right here, I know that I'm going to get about $50 again, or again, about a 10% return. Now, the implied volatility is a little bit lower than Coinbase. However, anything above 40 is still a very high implied volatility. So this is another stock that I'm going to sell a call credit spread on. I'm going to open up the 190, and then I'm going to go sell the 195. And again, you guys can see that the total credit here is $52. I respect your time, so I'm not going to place this trade. Let's move on with the next one. All right, the next thing that I want to look at is the uptrend potential. So uptrend potential, I'm going to click into SNPS. I want to take a look at the chart first, make sure that this stock is not at an all-time high. So again, we see that this stock is declining, and Cathie Wood has actually been selling it. Now, this is pretty interesting because Cathie Wood has already sold and she has not sold any further. I like this software because it's giving me that information. Now, I do want to pull this up in Robinhood and take a look at the options, SNPS. I have a feeling that this stock also has high implied volatility. Now, taking a look at the past 1 year, this stock is actually in an uptrend, which is a good thing. And also it has recently pulled back tremendously in the first couple of weeks. Now, this is interesting because what I want to do here is because over the last 1 year, we're still actually in an uptrend. This stock is currently up 27% in the past year, and I can actually see it recovering further. Now, this is a software products and consulting services company, 16,000 employees. The market cap is 50 billion. Price to earnings is actually very high. Now, I do want to take a look at earnings. February 16th, they have beat earnings once, met expectations beat. Looks like that's a met expectations and another met expectations. So pretty excited here because this stock has consistently beat. We've had a little bit of a pullback from recent highs. I like software businesses, and Cathie has stopped selling here. So before with Coin, Cathie was starting to sell. With SNPS, looks like her selling has stopped. So let's take a look at the options right here. What I want to potentially do, and I'm just educating you guys here. I'm not a financial advisor. Don't copy these plays because I'm just doing research and showing you how I'm thinking about the market and what I'm planning to do the rest of this year. If you actually want to follow my trades, that's in Discord. In these YouTube videos, I'm looking to educate you guys. So please don't just copy them and then comment later, this trade didn't work out. This is not a trade that I'm planning on making. Now, going for February 18th, I'm actually going to capture earnings, which is interesting because earnings are on February 16th, and the strategy that I want to show you right now is called a bull call spread. So rather than going for a credit call spread, a bull call spread, or really it's a debit call spread, both of them are the same thing. A debit call spread is going to be the opposite. We're just going to buy a call option, and then we're going to go ahead and sell another call option right here. So the total cost is $415. However, the max profit is $585. Or in other words, $400 can turn into $1,000. So you can 2.5x your money by February 18th if this stock recovers to $340 per share. And this stock was way higher than that. So this is how I'm thinking I'm going to be trading for the next few months here. I'm really going to take advantage of things Cathie Wood is selling and use call credit spreads in stocks that have already declined tremendously that I believe can pull back up. I'm going to be using the bull call spread. I'm going to have the link for Lucid Tracking in the description. I'm also going to have a couple more videos that you can watch on spreads and growing a small account. Thanks for watching. Keep educating yourself, stay aggressive in learning, but be safe in investing.